Hey, good morning, Sam.
Hello, hello. Here we go. I'm so excited for today's class.
Good morning. Hi, Kirsten.
Hi.
Um, I'm excited too. I'm excited. We just are here again, and it's how many of these have we done?
Yeah, I'm not sure. It's been a few weeks, hasn't it? We've done about
Yeah,
6 or 7.
yeah, wonderful,
We came,
wonderful.
we came to 7.
Um, yeah, so it's great that we have a bunch of content that is created for specifically the people um, participating as investors, as community members. Um, the other side is the people who are putting together these opportunities. Now, without people putting together these opportunities, we'd all have nothing to do, right? So, uh, you know, it takes two to tango. It takes both sides to create consensus. So, I think for this particular session, I'd like to just, draw a very, very, very big line down the middle of my whiteboard. Okay. And the reason being is we've covered off on a lot of things. As an investor or a participant in an opportunity, you want to be involved in things at the very beginning. You want to be able to de-risk yourself by retrieving principal. You want to also be able to read the data and make sure you're participating in something that is, healthy and growing, as opposed to something that is already mature and well, what happens after maturity? It's decline, right? So that's what we've covered on this side, right? First in, first out. Okay. And you're responsible for your own principle, which some people call it the 1x, right? Because we all want 10x, but let's just make sure we get our 1x. Right. On this side, however, we have people who launch opportunities. Now, this could be, for example, your the kids around the corner, right when they launch their lemonade stall, or in adult situations, probably, you know, a restaurant or a bar or, a school, on this side. So you want to look at, of course, the initial costs of setting one of these things up. What do you need? Okay, so for example, to launch an opportunity in the crypto space, very simple. You just have to get a smart contract issued, issue the token, and then convince people to participate. Now, the problem with convincing people to participate in a model that does not have clear and direct benefit it's not very attractive. The conversation will be less mathematical and more based on feelings and emotions. As an example, if I tell you to participate in something and you might ask me, what do I make at the end of the year? How much will I get back if I put this money in and ask for it back next year, right? Now, as with all startups, and that's how all companies start, what is it? It is the requirement of telling the market that it may go well, but anything can happen. Because you know what? The failure rates of startups is incredibly high. And we all know the odds are stacked against you. But that's where all companies start. So if you don't start, then there is no beginning, okay? So on the journey of starting up a company and subsequently generating a model that provides liquidity for your early investors, that is something which most people look at solving 3 to 5 years down the track. The problem with solving this problem 3 to 5 years down the track is you're not going to attract many investors, because investors want liquidity, even if they pay a premium. That's why it's called a liquidity premium. Things with liquidity are able to be marked up at a higher valuation. So here is a startup. Before, you have a situation where you might be born into a rich family or a poor family, a rich country or a poor family. The internet has made access to everybody, the knowledge of everything, okay? For example, maths, right? It made everything equal. So when we made information accessible to all, everybody's on a more level playing field. But how do you make sure you end up being able to create value for not just the people around you, but for people around the world? That's where blockchain came in. So, one is a startup has been able to now have access to all the information in the world through the internet. Through blockchain, it has the ability to access capital. Because you might think, okay, well, how do I make sure I'm able to pull money from the market so that I can have enough capital to start my business? And then subsequently, how do I then drive an outcome after starting my business and share it back with people who believe me? Okay, so the previous journey, as I mentioned, it takes years. Liquidity takes years. In blockchain, because everybody has access to sending and receiving value, it takes minutes. So, as a startup, whatever you set your mind to, whatever ideas you have, you are able to attract capital from the market on day zero. And investors who benefit the most are, of course, the people who support you on day zero. So you can see where I'm going with this. I'm sorry I ramble a lot, but I do these math classes completely unprepared. But you can see how I am here to make sure that everyone is coming in on day zero. But more importantly, when a startup attracts capital on day zero, what can it do? It can immediately deploy that capital to grow faster than all its competition. Now, I've used this example quite a few times, but I'll use it once more. Uber as a company has never made a profit in its entire lifespan. So for the last 15 years, from 2008 to 2013, 23, Uber has made losses. It has grown, but it has made losses. Now, as soon as autonomous driving switches on, then Uber will be profitable instantaneously. So what do we have here? The ability for startups to continually attract capital. That is what the success of Uber is. It has continually been able to attract capital regardless of losses because of its growth. Now, everybody expects a return eventually. What is the inevitable return? Well, when autonomous driving, AI and autonomous driving will make the drivers redundant, and you will have large networks of driverless cars, and that will instantly turn Uber in a loss-making company into a profitable one. But how did it last 15 years without even making a profit? Is because it has access to liquidity. Okay? It has access to liquidity. So here I am staring at this space, being in this space for so long, seeing everything that has happened in this space. And I'm just, wanting more and more startups to tap into this liquidity. And I want more and more people who support these startups to also tap into this liquidity. There is a potential of creating a win-win. Because when a startup deploys capital that is coming in on day zero, and the investor is deploying capital that it is able to retrieve back in tokens on day zero, what do you have? You have the multiplication. The multiplication of where a startup has more money to spend and an investor has the ability to multiply their wealth. This is missing in the market because all the existing exchanges in the crypto space, what do they say? They say, well, give me your smart contract and I'll charge you a listing fee. All the DeFi platforms, what do they say? Well, again, it is an exchange component that requires, for example, your gas fees. And it is never certain whether you're going to win or you're going to lose. So I want to make sure we're all here able to win and win again. So investing on day zero is winning, but also creating your own project and making sure that your day zero investors win is also winning for you as well. That is what is on the other side. And so the startup instantly on launch commits to a liquidity event for the investor. The startup's job is to keep raising capital as long as the cost of raising capital is lower than the amount raised. And then once the cost is higher than the amount raised, there just needs to be a modification to the tokenomics to ensure that we protect all the investors. So here's what it looks like. And we've seen it before. We've seen it before in our minds, maybe. But more importantly, here it is on a whiteboard in clear crystal black and white. Okay, so you have the capital that is raised, and this is time, right? So what happens is the amount of money that is coming in may be like that. The amount of money that is returned to market through the liquidity that you've promised the market will always sit below, will always be zero on day zero, but will steadily climb over time. Okay, until it reaches a point. This point is sometime in the future. Remember how I said there's a beginning, middle, and end. This point is sometime in the future. This is when, let's say, the deposits and the cost of collecting those deposits meet. It's inevitable that this happens. Just like how in a stock chart or a crypto chart, whatever you guys do for trading, a token may go up continuously, but there will be a time when it starts hitting down. Okay. So in this model, the beginning, middle, and end ends with the cost of raising capital or the cost of goods sold exceeding what you're receiving in deposits. So that's when you finish everything off here. And what are you left with? You are left with some people, especially the day zero people, coming in and taking out a profit. You also have people who come in and they break even because they've retrieved their initial principal, but they are left with some tokens because they want to support the opportunity. They want to be part of the ongoing narrative. And then, of course, there are people who come in at the end who put in their hard-earned investment and end up with tokens. Now, when this happens, it is important to note that it only happens to make sure that there is the ability to have capital to launch whatever project that is required. So if a startup says, for example, by launching a restaurant, they need this much for the fittings of the kitchen, this much for the fittings of the diner, and then this much for the rent and staff, then this much must be raised. The total amount raised is the difference between the sales of a product and the cost of sales. So my emphasis is, since we are looking at a beginning, middle, and end, and an amount of money raised, if you do not end there and you just kept things going, you will continually lose money until the money that is raised for the purpose of the business is all back to the market. Which is fine. There is absolutely nothing wrong with that. But when you do this, then what happens? it just means that the money is now back to the market, and whatever consensus or whatever you want to build to create that consensus is no longer going to be of any value because you're out of capital. The objective of running a business, or the objective of life in general, is to never run out of money. Uber is a great example. It never makes money. It's not profitable as a company, but it doesn't run out of money. It's always able to tap into the market for more money because it has got a business model that has a delta. So the way I see it is, this model has nothing to do with well, it's no different to the traditional capital raising model. It's just a misunderstood model. So as long as we're able to explain things in a more mathematical term, we're able to see, great, there is an opportunity for a startup to tap into a huge amount of cash by setting up and bringing together an opportunity and presenting it in front of day zero investors. So I just want to emphasize that this model has already been proven. It's been proven many, 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 many times over, even before I was born. But it has not been put in a regulated structure for people to capitalize on this. So the advent of blockchain, the advent of internet creates a window. And in a increasingly restricted financial ecosystem, this window, I believe, could be the answer to an enormous amount of new capital that goes into some of the greatest opportunities that will be offered into the market in the very near future. So I want everybody to have a look at this, and also have a look at this, which is basically a chart, right? Everything can go up, everything can come down, but as long as there's liquidity, things keep running. So I really hope that we could, through the power of maths, tap into the liquidity that is available in blockchain. Through the power of maths, really help many people who are not connected into a structured and equitable financial ecosystem to now participate in something that is more transparent. So, you know, that's it for me. That's it for today. Any questions?
Thanks for that, Sam. I feel like it's gone a little bit over my head, but I'll catch up with Alex after and he'll explain it in my terms. Anyone got any questions for Sam? Elias. You can unmute yourself, buddy. There you go.
Okay. Hi, how are
Hi.
you? Okay, thank you. It's just to put a question that now after a long journey with Sam in 5 of the previous platforms, now I became understood the way you think, Sam. So with this new understanding, I want to buy back my team, and also I want to move on with the relaunch of this new vidlook. But it is to say that, unfortunately, maybe like me and other people also are here who want to move on with the new launch from day zero with this new understanding, like me and my team. But we are become in the position that we don't have a new fresh capital. As for me, all my capitals so far are in 5 of the investment platforms. That is 4, but I invested 5 times. We look 2 times, and now this fifth is on vent. So it is to say that just if is there be any room
No,
space
there won't be. No.
to reinvest?
No. Why?
It is because
It's not my problem. You don't understand how to sell. Okay.
Yeah.
Every single one of these opportunities allowed you to make a decision of entry and exit. Okay. And there will be a time when things reach an end. So that time previously was not that transparent, but now it is. So now that it is transparent, then it is easy to make these kind of decisions.
yes, yeah. So just humanly speaking, since we are in the journey all this long, just to give us room to reinvest at least 1/4 of our principal capital that is not withdrawn, so that we can move on. From this time now, we will know, and we will teach our team also, and we have enormous potential from my part of the world. It is untouched market in this area of location. So there will be more new teams that will be coming after us with this new understanding, and also benefit others. So just let us give us room to reinvest our 1/4 of our principal capital with this new relaunched event from day zero. Then from this time, with this understanding, we will part of your team, and we will move on with vend opportunity, because it is attractive opportunity. It is good. So just don't let us left us behind the train.
No, very simple, right? Very simple. Look at this industry. Look at this space. What do people do to get your attention? They give you an airdrop. Okay, we've done this before. You know, a Stellar, which is a very popular token now, they did airdrops. You know, we ran their entire Asia Pacific roadshow back in the day, and gave a lot of airdrops to everyone. All these airdrops are worth thousands of dollars now. But what I'm trying to say is, when things are given away, it's in exchange for your attention. And if your attention is looking at the if your attention is looking at the wrong area, then you will not win. Now, I've already explained very simply, right? The community, leaders, owners, and technology provider creates an ecosystem, okay? The owners are there to work with presenters to create consensus amongst the community. And that consensus will include people who buy and people who sell. The technology provider makes relatively little money because our job is just to be transparent with all the deposits, all the withdrawals, and the entire balance sheet. If this financial knowledge didn't come to you earlier and you've lost money, that's not my problem. And now that this is here, then it's up to you to make a decision on what you want to do. Now, the thing is, when you say you've been following me, you haven't. Okay? Because my mobile phone number has been available to the market ever since I started in the space. So please do not say that you've been following me, right? Because I've made the people who have really been following me incredibly wealthy. And the people who obviously are too lazy to reach out to me, well, to do their due diligence, to fact check everything, right? To understand this, it's not my problem. Why is it that people reach out to me only after they make a problem for themselves? I get how many messages a day? It shouldn't be just how many messages a day. It's how many messages an hour, right? It doesn't matter. I'm more than happy to receive all these messages knowing that there is a problem. There is a problem. And the thing is, for me to say, hey, here's a solution, just trust me, doesn't work anymore. That is why I'm explaining it using maths and just allowing you guys to then just recount all the experiences you have, not just here, but everywhere, okay? In all your investment decisions, what was the cause of loss? not selling. Okay, and on the other side, if you were operating a business when losses exceeds profits, what do? You reorganize a business. This is when businesses reorganize, when the cost exceeds revenue. Simple. And what I want everybody to realize is this is a mechanism of raising capital that has been done again and again and again, but is highly misunderstood. And if we're able to both tap into this as investors, right? As well as tap into this as a company, we're able to create a liquidity event that puts both investors on day zero and the company who leverages this ahead. So, yeah, I really appreciate everyone's attention, but we need to focus our attention on the actual facts, what is actually provable, right? What is provable is that everything has to have an end. As long as there's promises to be made, there has to be an end. And everyone here has to be disciplined enough to focus on repeating something that just works again and again and again and again. So, yeah, I think that's it. If there's no more questions, we'll leave it there.
Just to add on what I said, one proposal only, and I will stop. That is, since I have, as I mentioned, a big team behind me. Now with this new knowledge we have got, the trust I mentioned is because you appeared yourself as advocate and rescuer of the community when you first appeared at Hyperverse time. That is why I put my trust on you.
I didn't build that community.
Yeah, I know.
Okay, I didn't build.
Yeah.
I didn't build any of these communities. You guys did.
Yeah.
But you guys built it the wrong way. You guys built it a way where it involves a lot of trust and no data. So now that there's data, there is no need for trust. There is no need for trust. So what I'm doing is putting an end to the past and starting fresh with this very small math class, because the numbers don't lie. These business models are all the same. We just need to recognize a pattern and repeat.
Yeah.
And of course, more importantly, do it in a transparent environment. Thank you.
Awesome. Thank you, Sam. I hope you guys got something out of that today. I certainly did. And I'm looking forward to watching the new projects roll out. I mean, I'm keeping an eye on it all, but won't go into it on this class. But yeah, it's with the learning that we've got. Sam, can I just explain one thing? Because you said, think back, like apply this to everything that you've been through. And I was thinking back to when Paul and I joined Hyperverse. We got caught up in the hype because it was very hyped. It was a cool feeling actually. But we were getting, our numbers on the screen were getting bigger and bigger and bigger because we were just like, oh, rebuy, right? So I think our greed was taking over. And so the number was getting really massive on the screen. And we were forced into a position where we had to pull our principal out because Paul didn't work for a long time. Well, he didn't have to because we was, you know, we could pull the money out. But shortly after that, that's when the end came, right? So we were forced to get our principal out. So for us, that was a really good learning. But then we move on to something else, and what happens? The numbers on the screen get bigger and bigger, and we're thinking, oh, and that time we didn't. So this is a learning thing. Always, always, always protect your principal. Get that out first. Doesn't matter how appealing something looks. Pull that out first and then start again. Just go again. And like you said, Sam, it's not about massive wins. It's about small wins repeatedly. That's the key, I think. And that's what Paul and I finally got. So thank you very much for your time. We really do appreciate you. And yeah, have a great week, everybody, and go and apply the things that we've learned. Alex, have you got anything to say before we go?
I just want to say, like everyone, to take any knowledge of the math class is very vital for not only Ben, but you entire life. You know what I mean? So I just want everybody to take any knowledge and put it to perspective. Thank you very much, Sam, for the knowledge.
Perfect. All right, guys. Thank you very much. Thanks, Alex. Thanks, everyone, for being here, and we'll see you on the next one.
Thank you, Sam. Thank you, Kirsten.
All right. See you guys.
Thank you, Sam.